The train doesn't announce itself. There's no bell, no warning, no loudspeaker telling you what's about to happen. You only notice it when you look around and realize everyone else is already moving. That's how money works now. And that's why banks don't want you holding $50,000 in cash. Not because it's illegal, not because it's unsafe, but because and control, quiet, invisible control, is the real product banks sell. But let's start at the beginning. Not with a bank, not with a vault, but with a regular person, someone like you. Imagine this. You've been working for years, saving quietly. No crypto hype, no risky trades, just discipline. You finally hit it, $50,000, not life-changing money, but enough to breathe. Enough to walk away from bad deals, enough to say no. So you do something that feels reasonable. You go to the bank, you withdraw it, all of it, and that's when things change. The teller pauses. Not long, just enough. They ask questions they've never asked before. What's this for? Are you making a purchase? Would you like to speak to a manager? You smile, you answer politely. But something feels off. Because the money is yours, you earned it. You paid taxes on it. You followed the rules. So why does it feel like you're asking permission? That's when you realize something important. They get nervous when it becomes yours again. Most people think banks store money. They don't. They use it asterisk. When your $50,000 sits in a bank, it's lent out, it's leveraged, it's multiplied, it's invested, it's used as collateral. Your money becomes part of a machine. A machine that creates profit for them, not for you. That $50,000 might help fund a mortgage, a business loan, a government bond, a corporate expansion, and you get asterisk 0.2% interest asterisk if you're lucky. Banks don't make money from fees alone. They make money because your deposits are raw material asterisk. Cash in your home safe. That's money asterisk they can't deploy asterisk. And unused money is the enemy of a bank. Here's the part no one tells you. Banks don't care about small balances. $500, $2,000, $10,000, that's noise, but $50,000, that's different, because $50,000 represents liquidity, optionality, independence. At that level, people start thinking differently. They stop needing overdrafts. They stop accepting bad loans. They stop panicking during emergencies. They stop playing desperate games. And desperate people are more profitable asterisk. Debt thrives on urgency. Calm is dangerous. Modern banking is built on asterisk flow asterisk. Money must move. From paycheck right arrow bills, from bills right arrow credit cards, from credit cards right arrow interest, from interest right arrow profit. Cash sitting still breaks the rhythm. It's like someone stepping off the conveyor belt. That's why banks push automatic payments, subscriptions, buy now, pay later, credit rewards, low interest savings accounts. They want your money asterisk circulating asterisk, not resting. Because still money can think. Banks operate on a quiet assumption. Most people won't take their money out at the same time. That's the entire model. Your $50,000 is not actually sitting in a vault. It's already been promised to someone else. If too many people ask for their money back at once, the system shakes. That's called a bank run. And nothing terrifies banks more. So when individuals start holding real cash, it signals something dangerous: lack of trust. And trust is the only thing holding the system together. Here's the truth most people miss. Cash doesn't just buy things, it buys asterisk time. Time too. Wait for better opportunities, say no to bad deals, survive layoffs, avoid panic decisions. Think clearly. Time is leverage. And leverage shifts power away from institutions. When you don't need immediate liquidity from them, you become harder to influence, harder to upsell, harder to scare, harder to rush. Banks don't fear poor people. They fear asterisk patient people. You'll hear it all the time. Cash is unsafe. Cash can be stolen. Cash earns nothing. Cash loses value to inflation. Some of that is true. But notice what's missing. They never say cash gives you independence. Because independence doesn't generate fees. Yes, cash has risks, but so does dependency. And banks would rather manage your risks than let you manage your freedom. Every dollar inside the system is tracked, time-stamped, categorized, analyzed. That data is valuable. Cash outside the system, invisible, unpredictable, unmonetized. That's why the future is being built around cashless payments, central bank digital currencies, spending controls, behavioral nudges, not because it's more convenient, but because control scales better digitally. $50,000 in cash is silence, and silence is hard to sell to advertisers, lenders, and algorithms. Think of the financial system like a train. Most people are passengers. They sit, they scroll, they trust the conductor. As long as the ride feels smooth, they don't ask where it's going. Cash is stepping off the train, not running away. Just standing on the platform, watching, deciding if you want to get back on or not. Banks don't want you on the platform, because once you realize you can step off, you might not rush back. This isn't about hating banks. Banks serve a purpose. They move capital, they fund growth, they stabilize economies, but they are not neutral asterisk. They have incentives. And one of those incentives is keeping your money inside their walls. Not because they care about your safety, but because your money works harder for them than for you. $50,000 in cash is not rebellion. It's not paranoia. It's not extremism. It's a signal. A signal that you planned ahead, controlled spending, built margin, resisted urgency, bought yourself time, and time is the one asset no bank can print. Here's the quiet truth they won't advertise. The moment you don't need them, their power over you fades, not disappears, but weakens. That's why they're fine with you having money. Just not liquid freedom money. They want assets locked, money moving, debt rolling. They don't want you holding still. So what do you do with this knowledge? You don't panic. You don't hoard recklessly. You don't reject the system entirely. You understand it. You use banks, but you don't depend on them. You let money work, but you keep reserves. You ride the train, but you remember where the exits are. Because the real advantage isn't cash. It's choice. Banks don't want you holding $50,000 in cash, not because you're wrong, but because you're less predictable, less desperate, less controllable. And in a system built on movement, the person who can stop has already won more than they realize. The train will keep running. The question is, are you riding it blindly, or are you finally watching it pass with your hands free, your time protected, and your decisions still your own?